So in today's episode, we discuss how does a mortgage work and answer some commonly held questions such as how long does it take, is it worth it, and how do I pay off the mortgage? Let's get started. Hi everyone, I'm Carl.
Hi everyone, I'm Mo, lead mortgage planner at Mortgage Architects. We're excited to be back making those great videos that everyone loves.
And welcome to the Homebuyer Show, where homebuyers get the latest strategies and tactics to help them buy their next home. And remember, if this is your first time on this channel and you want to get the latest strategies from home buying experts, hit the subscription button below, hit the little notification bell so you're up to date. So Mo, it's great to be back with you. Let's roll it back up. Let's start right from the very beginning. How does a mortgage actually work in Canada?
Yeah, Carl, thank you. It's great to be back. Starting from the beginning all over again sounds amazing. So the way a mortgage works in Canada, a mortgage is considered to be a secured loan. It's a secured loan. You can have a mortgage to purchase a property, purchase land, but ideally it's a secured loan to purchase a home, most likely.
Now, is it worth it to get a mortgage, or is it better to just save up as much money as you possibly can?
Well, it's tough to say. Nowadays, it's almost based on where Canadian home prices are kind of heading. You'd have to wait a very long time before you could buy a house or even save for a large down payment. What I tell people is try to use the benefits that we have available to us in this country, right? So I have a lot of Canadians, a lot of clients that are coming to me, and they're actually new Canadians or they're new to Canada that we kind of consider. So for them, and I hear stories from them, and they're telling me about how difficult it is to own a home from where they're from, right? So, and it kind of makes us realize how lucky and blessed we are to live in a country where home ownership is not also very easily attainable, but it's quite easy to do as well. So with all those benefits in mind, I think the sooner you can get into a house, the sooner you get into the market, the better for you. You start paying your own mortgage, you're not paying the landlord anymore. You start building equity, you start seeing appreciation. For a lot of people, their home turns out to be their biggest investment they'll ever make. The sooner you start in it, the sooner or the more ahead you will get.
So let's go back. Can I actually buy a house with cash and then get a mortgage after the fact?
Yeah, absolutely you could. So if you had tons of cash available and then you wanted to buy a house, you could definitely do that. So what we call that is called a refinance, right? So you have a property, you have a security that's considered free and clear. Most lenders, most banks will lend up to 80% loan to value. So what loan to value just means is the loan compared to the value of the home, right? So most lenders will go to a maximum of 80% of what your house is worth, and you could take that money back out if you ever needed it.
So how long does a mortgage usually last for, right? I hear 5, 10, 20, 30-year mortgages. Like, what would be a typical length of a mortgage?
Yeah, so I would say 90% of the people are getting 25-year mortgages because I would say 90% of the people are going through what we call the insured mortgage, right? When they have down payment less than 20%. And when you have down payment less than 20%, you're kind of maxed out at 25. You can't go up to 30. Now, there is a benefit. If some people have saved up enough down payment to get to the 20% mark, they could go up to a 30-year mortgage. So sometimes you can go up to a 30-year. I would say the most Canadians or the most percentage of Canadians are probably getting a 25 just because they're in that insured market with CMHC or Sagan or Canada Guarantee.
Cool. And if you want to know more about insured and non-insured mortgage, you got to check out our video here, and I'll leave it in the description below. So, on the topic of 15, 20, 30-year mortgages, why would somebody, let's say, get a 5-year mortgage versus somebody who would get a 30-year mortgage?
So if someone wanted to get a 5-year mortgage, they would be very comfortable with their payments being extremely high, right? They would kind of be more looking into paying it off soon. It would be someone that's not comfortable having debt, but they had high income. They would go with the 5-year mortgage. They would want to pay it off, and then within 5 years, they're done. Someone who's wanting to take a 25-year mortgage would be like the average Canadian, someone that can afford the payments over a longer term period. So they have 25 years to pay it off instead of someone who has 5 years to pay it off, someone who kind of values their lifestyle, right? Like maybe paying off debt is not the end all be all for them. They want to enjoy their life. They have vacations they want to take. They want to go on trips. They have other debts, other obligations. They might want to go with a 25-year mortgage so their payments are maybe as minimum as they can get, and it's actually spaced out at a longer time period.
Let's actually get into paying off your mortgage. Let's say, I don't know, you got a 25-year mortgage, but, you know, let's say you came into inheritance. Could you actually just pay off your mortgage all at once? Or have you actually signed a contract where you actually need to pay it off with a monthly or a yearly annual fee until the 25 years?
Yeah, the way it works is really just dependent on what you set up for yourself with the lender, right? What kind of contract you signed. Now, if you have a completely open mortgage, where technically most people don't do that because the interest rates are quite high on those, you could pay it off at any time with zero penalties. But averagely, most people are going with a fixed term with a fixed rate or even a variable rate. They have a certain time period where they've kind of committed to the bank or the lender to be with them for at least that time period, which is 5 years. Now, most contracts do have some benefits or advantages built in, which are called prepayment privileges or prepayment options, where you could put down, depending on the lender, anywhere between 10, 15, 20% of your mortgage balance at any time within the calendar year to help pay it down sooner. And you could also increase your payments, whether it's weekly, bi-weekly, semi-monthly, or monthly, to help pay it off. Now, if you take advantages of both those options, you could actually do a lot to pay down your mortgage, because any extra that you put down on your mortgage goes right towards principal. It doesn't affect the interest. And since mortgages are calculated on a decreasing balance, like interest is calculated on a decreasing balance, your interest charges over the time period reduces because the balance is reducing, right? So yes, so going back to it in the short term, could you pay it off? If you had an open mortgage, you could. If you didn't have an open mortgage, you'd be kind of set to the prepayment amounts that you've been entitled to. Anything above that, you could face a little bit of a penalty, depending on what kind of term you have and what the penalties are.
You know, I've always wondered, is it better to pay off your mortgage or invest in something else?
It's a good question, right? Like, so it depends on your rate of return, I would say. So if your interest rates are really low on a mortgage, right, but the rate of return is higher somewhere else, maybe invest that money and not pay down your mortgage. Because based on today's rates right now, mortgages are extremely, extremely low. It's not considered to be a high debt or a high interest rate loan compared to credit cards and lines of credits. Sometimes you're getting away with rates in the range of like 1.6, 1.7, 1.9%. And to me, it's almost like it's free money, right? Like, so why take hard-earned savings to pay down your mortgage when you could probably pay down a high interest debt, maybe invested into other avenues or investment vehicles where you could get a better return?
And remember, if you're getting value from this video, we'd really appreciate you hitting that like button. And the question of the day I have for you is, what are some of the things that you wish you knew when you got your first mortgage? Let us know in the comment section below. So Mo, I have one more question for you on this topic. And so what is the what is the fastest way to pay off a mortgage?
The fastest way to pay off a mortgage would be to use those prepayment privileges that you have. So maybe set up a plan where you can increase your payments, whether you've set it up monthly or bi-weekly or semi-monthly, and kind of budget it. So if you can afford whatever extra that you can, make that into your prepayment option regularly so it's coming to your account. Any other money that you can save, let's say you get a big bonus at the end of the year from work, or you get some Christmas money, or you get some other funds, start throwing that down on your mortgage. If you actually take advantage of those prepayment privileges and options, you could actually pay down your mortgage a lot sooner. And it's more like a compounding effect, right? The more you make your payments, the more extra you pay down, it actually pays the interest so much quicker off that before you realize it, you can knock off a good 5, 6, 7 years off your mortgage term or the life of the mortgage, depending on the amounts. But I've had clients pay off their mortgage within 5 years just using those prepayment options and privileges that they've had, right? So at the end of the day, there's lots of options available to pay it off sooner. Look into the prepayment options.
So do you have anything else to add in terms of, understanding what is a mortgage and how to get your first mortgage?
Yeah, so a mortgage for a lot of people, it seems like a very daunting thing, right? It seems like such a grown-up word that we throw around, like, hey, I got a mortgage, I have a home. But you'd be surprised how much home ownership has become so easily attainable in Canada, it's become more adopted at an early age for young Canadians as well. So as soon as you have, let's say, a little bit of your down payment saved up, even if you don't have a little bit of down payment saved up, you have a good job, you have a good stable job, you've worked on your credit, you know you can afford that payment, look into your options into getting a mortgage sooner. And I think it's one of the greatest ways to start building wealth or something for yourself a lot sooner, and one of the easiest ways to do it, right? Like in this country, having a mortgage or getting a mortgage much easier than, like I gave an example in the beginning of the video. I've had clients that they come in, they move here from other countries where home ownership is almost technically impossible, right? Either you have the money to buy, or it's something that your family is very wealthy and they leave it to you. But in Canada, we're very fortunate, very lucky. Use those options, use the programs we have available to help you get into a house.
And if you want to learn more about mortgages and mortgage rates, you got to check out this playlist here, as well as this playlist for other home buying tips and strategies. Thanks for watching, and we'll see you in our next episode.